Welcome everyone to today's rent.com.au investor briefing webinar. It's a pleasure to have you with us. My name is Nicola Gazzatti from Investor Relations Consultancy Corporate Storytime. Rent.com.au Limited is Australia's leading renter-focused technology platform, purpose-built to meet the financial and digital needs of the country's 8 million renters. If we think of REA as the go-to platform for buyers and homeowners, and that car sales dominates the auto classifieds market, rent.com.au is building the same category-defining leadership position for renters, an audience that has been largely overlooked despite its scale and importance. A key part of this story is Rent Bond. This product directly solves a major affordability challenge for renters, and following the recent financing agreement, is now positioned to scale significantly. That deal gives Rent the capital capacity to significantly expand rent bond volumes and revenues, creating a powerful annuity income stream. Alongside the growing adoption of Rent Pay, these developments are strengthening the platform and setting the company up for an exciting period of growth. With that context in mind, it is my pleasure to introduce Jan Ferreira, CEO of rent.com.au. Jan will share the progress to date, the lessons learned along the way, and the opportunities ahead as Rent accelerates its growth. Following Jan's presentation, we will open the floor for a Q&A session. So without any further ado, I am pleased to hand over to Jan.
Thanks, Nicola, and morning, everyone. Thank you for joining us. Before I go into our strategy and update, for the new people on the call, what I'll do is tell you a little bit about who we are. So we've got an experienced board of directors, all of whom are significant shareholders as well, led by Sam McDonough, former country manager for Airbnb and a regional manager for eBay. Within the management team, we also have a lot of experience, particularly relevant experience for Rent Bond, and that's one of the reasons why we're so bullish about that. Most of that team are also shareholders. In fact, management and board collectively own around about 12% of Rent shares. Our share price has recently been hovering around about the 4-cent mark, trading just either above or below that. And that gives us a market capitalization of just over 38 million. But more importantly for us, it puts about $8 million worth of options at or in the money. The exercise of those options will allow us to significantly expand and accelerate our growth. Just stepping back a little bit in terms of why we do what we do. So rent.com.au exists to make renting rewarding. And by that, what we mean is that we want the whole process to be a far better experience than it is today. Much of the national conversation about property tends to be about home ownership, house prices, etc., with renting kind of relegated to hard luck stories and the like. We see this reflected in real estate agencies too, where property managers are, I guess, the second-class citizens of an agency. Even though, weirdly enough, the only asset that an agency has when they sell is their rent roll. The reason we focused on the renting sector is because it is huge and it is overlooked. So the absolute number of renters in Australia has consistently grown as both the population has grown and the percentage of people renting has grown. And we see that growing towards the 40-odd% that we see in comparable countries like Canada, the UK, etc. There's $85 billion of annual rent paid in Australia and about 200 million in monthly bonds lodged. So that's $2.4 billion of bonds. Capturing just a very small share of that market would significantly multiply the valuations for rent. We've been moving from being purely a listings business that monetizes our audience through advertising and useful, but once every 3 years, transactional products, to building more consistent relationships with our renters through Rent Pay initially, and now through Rent Bond. Going forward, we'll add additional ongoing annuity products like insurance, savings, investments, and other things. We've seen the compounding impact that recurring revenue can have on as a benefit for the business, where even modest growth in Rent Pay customer numbers and growing ARPU has driven step changes in the revenue that we get. With Rent Bond, we see a similar opportunity, but the great thing there is we already have 4,000 people applying for a loan every month, so we've got the demand there. We expect further growth to come from combining or cross-selling Rent Pay with Rent Connect, Rent Bond, etc., and adding those new revenue streams. RentBond is a product that's been around in various iterations for about 10 years now. And that the gap that it solves is not a new one. It's been around, but it's never been adequately resolved. When a renter moves, it's one of the most stressful time. I mean, even when a homeowner moves, it's a very stressful time. But for renters, it's a really condensed period. They have between 4 and 6 weeks where they have to get everything together, like from finding the property to booking their move. Then they've got to switch all the utilities, etc. And they have to lay out about 4 weeks rent in terms of the bond, 2 weeks rent in advance. But they haven't even got their bond released from their previous property. So it's a significant gap and a pain point for them. And this is where rent bond really shines. So not only do we bridge that gap where not a lot of other providers in the market would finance such a period, but also if they repay within 21 days, it actually costs them nothing. Now we see that very few people actually do repay within that time period, but the option is there for them, and that's why the product has been rated 4.8 stars by renters over a long period of time. In terms of the rent bond rollout, so we've previously announced we've got the 10 million facility secured. We've already drawn down $1.6 million to cover the first few months of funding. We're getting good advice and support from the lender team. They are very experienced in this space, and that's complementing the experience within our management team. The first month's trading has gone really well. We've been progressively rolling out, and we've been quite conservative in the approach, just making sure we're refining before we sort of expand. But we're on track to grow to that $1 million a month in terms of loans within the next 2 to 3 months. In terms of the business case assumptions, so we've talked a lot about the fact that we can drive 6 times revenue by bringing this product in-house. And pleasingly, the first month's trading is actually proving that out. So the average loan size is just over $3,500. The average term is just over 13 months. And importantly, the lifetime revenue that we've got from those loans that we've actually written is just over 6 times what we would have received under the old model. So summary is we're on track and we're really starting to see the volumes grow. In addition to that baseline growth that we get by just changing the business model and getting that 6 times uplift, we've got other opportunities to scale rent bond even further. One of the things we've consistently felt and we're starting to see early benefits of is the user experience, just keeping people on our site rather than flicking them off to third parties, is seeing more people get to the point where we can actually make a decision on them. And we also have started working through gathering the data that we need to have AI supporting our credit decisioning. So, for example, one of the things that we want to look at is we have rental application data. So when renters apply for a rental property, they do fill in a lot of information, which is in many cases similar to a loan application. We already have that information captured through the application process in our renter resumes. So using that to get a quicker response and also be able to make a smarter response that other lenders cannot, we expect to see us grow much faster. Next also comes product extensions. So we're looking at landlords' rent smoothing products, so covering sort of one-off bills or vacant periods that they have to have a consistent income stream for landlords through providing a finance product. And also variations. So at the moment, rent bond is just a straight out personal loan, but we're looking at introducing buy now, pay later and other options to cater for different customer demands. Partnership channels are also very important to us. We already have a number of significant partners that refer their customers to us to process loan applications, and we will continue expanding those. For example, through real estate agencies, rent bond is a great way for agencies to generate incremental income with minimal effort. With RentPay, the proposition is something that we're always looking at refining and improving. And currently, we balance the renter offering with what agencies want. And we have about 25% of our user base is joins us from, I guess we call it off the street. So they join without any agency involvement at all. And the reason they do that is because they like the flexible payment options, so either the scheduling, but most importantly, what we see is they're liking to use their credit cards to hack points, etc. We do offer cashbacks and rewards. We've got a partnership there that provides good savings for customers. And recently, we've bought our line of credit called Scorebuilder in-house alongside the rent bond, bringing that in-house. Collectively, these provide us the opportunity to drive higher margins. So with Scorebuilder, by bringing it in-house, we're getting higher margins. We've also recently been accredited as a consumer billing service provider for credit cards. So what that means is that we're no longer classified as a merchant. So it allows us to increase our margin on that by charging a platform fee. And from a risk perspective, it also moves us out of the scope of what the RBA is looking at in terms of their review of credit card surcharges by merchants. So we should escape that. In terms of agents, well, we provide great productivity benefits for agents. We've consistently proven the value proposition to property managers. This is proven out by not only sort of case studies that we've done in them, but the fact that we've had a number of win-backs through this. And we expect more growth through agency group partnerships across both Rent Bond and RentPay. What this has led to is significant growth for us. So as I called out earlier, we've had consistent growth in active customer numbers over the years, and it's been pretty pleasing over the last 3 years, 45% compounded annual growth rates. The ARPU keeps increasing as people are using those flexible payment options. But collectively, there's a multiplier effect when you combine both customer growth and revenue per customer growth. We've had 222% growth in recurring revenue across the past 2 years, to where at the moment we get about 1/3 of revenue is coming from recurring sources through RentPay. This brings us to what our targets are. So we've been quite explicit about this because we're very confident about hitting these. So from a revenue growth perspective, we've proven up that the financial assumptions we made around rent bond are valid. So getting 6x the revenue compared to the old model, combined with recent strong growth in RentPay, we expect that we will be doubling our group revenue within the next 12 to 18 months. From a profitability perspective, this revenue growth without associated costs, so costs will increase, but not nearly as fast as revenue does. So that puts us in the frame to be EBITDA positive within the next 12, 18 months as well. So we're targeting Q2 FY27. Pleasingly, most of this revenue growth is going to come from recurring sources. So we expect that by the end of this current financial year, more than 70% of group revenue is going to come from recurring sources. Collectively, these put us in a great financial position. Of course, if the $8 million worth of options that are almost in the money are exercised, we can accelerate that pathway to profitability and get there much sooner. Thanks, Nicola. That kind of brings us to the end of the formal presentation.
Thank you so much, Jan. We'll now move on to our Q&A session. Our first question for you is, with the launch of Rent Bond, have the other parts of the business become less of a priority?
Absolutely not. We're building a platform for renters here. So Rent Bond actually bridges the gap between rent.com.au, which is focused on helping people search for a property, apply for it, and then move in, with RentPay, which covers the tenancy period. So Rent Bond is a great way for us to unite all the different parts of our business. We want to cover the entire renting life cycle.
Thanks, Jan. Our next question for you. You've said that the renting market is huge. How is rent.com.au positioned to capture a larger share of this market?
It is huge. $85 billion a year in rent, $2.4 billion in bonds lodged. It gives us a massive opportunity. And we're the only ones that are really targeting renters from a renter's perspective. There are other businesses that focus on property management, but generally they tailor their solutions to the real estate agencies that operate in that. By building up that relationship with renters that I spoke about earlier, not only does that give us the ability to generate recurring revenue, but that ongoing relationship allows us to provide more services and more products into those renters.
Thanks, Jan. Our next question for you. You're looking to double revenue in 12 to 18 months. What are the key drivers that give you confidence in achieving this?
Probably the biggest impact in terms of doubling that revenue is the changed model for rent bond. Given the experience within the team, we've always been confident that we will achieve that. But the first sort of 5 weeks or so of trading has actually proven out all those assumptions. So we're right on track to do that, and that 6 times rent bond was already a significant contributor to group revenue. But getting 6 times the revenue over that time period gives us a lot of confidence that we'll do that. We're also seeing good growth in rent pay, and we're starting to see, I guess, more usage of our normal renting products as well. So everything kind of points us in that direction.
Thank you, Jan. My next question for you. You've recently spoken about rent.com.au becoming a billion-dollar business by becoming the default for renters. How do you see that positioning creating strategic value for larger players in the sector?
I guess the sort of the hidden question there is, are we looking to exit, and who do we think will buy rent.com.au? Well, we're not building for that. We're creating a relationship with a very significant proportion of the market. 30% of people in Australia rent. And so really the value there is not just for other companies within the real estate sector, but anybody wanting to have access to a significant channel of people, predominantly under 40, generally not like with a lot of disposable income, etc. So we see energy companies, telcos, etc., either looking to acquire or to partner with us to gain access to that channel.
Thanks, Jan. Beyond rent pay and rent bond, what is the longer term vision for rent as a platform for renters, and how does that expand your revenue streams?
That relationship with the renters is key. Historically, what we've done is we've done a great job at attracting renters to our sites, but with the exception of rent pay, we've generally just referred people off to become customers of other companies. With rent bond, we're bringing that in-house. We're actually starting to own that relationship with the renter. And so by us providing the smartest way to search, the smartest way to pay, providing other products and services in it to help renters get ahead financially, we see us not only kind of growing that relationship and that stickiness with renters, but there are other income streams, insurance, savings, investments, etc., and ultimately even home ownership that open up avenues for new revenues for us, and importantly, recurring revenues for us.
Thank you, Jan. And just moving through another couple of questions, and you briefly touched on this during your presentation. Could you please explain if most new rent pay users are coming from the agencies you partner with, or are they finding you directly through your own advertising and word of mouth?
So we don't do a lot of explicit advertising, or certainly not consumer advertising for rent pay. So the fact that we consistently, and this has been true for the last sort of 2 to 3 years, we're consistently seeing around about 25% of rent pay users joining organically. So that's word of mouth, or they've explicitly kind of looked for us. And that going forward, we see that continuing, so that agencies will continue to play a part in that, and we're working with several agencies on that at the moment. As I've mentioned earlier, we've had some winbacks as well. But we still see that ultimately renters need to use the product and want to use the product, and so that will continue growing as well.
Thanks, Jan. Our next question for you. When it comes to making rent pay bigger and reaching more users, what is the single biggest challenge you're facing right now? Is it mainly about getting more real estate agencies to sign up, or is it more about convincing renters to use the service?
Well, it's a bit of both. As I mentioned, with consistently 25% of renters joining us organically without any agent involvement, we need to make sure that we are continuing to provide renters with like the smartest way to pay their rent, right? So adding value to them, really working on that customer proposition so that we can grow our renter, like our organic renter base much, much quicker. From an agency perspective, it is continuing to provide them and staying ahead of their technology needs to make sure that they continue getting good value from the productivity benefits that we offer. So we'll continue working on both of those channels going forward.
Thank you, Jan. And this is our final question for today. By my calculations of applications and average loan size, Rent Bond seems like it should utilise the full 10 million. Is there an easy avenue to increase this so you aren't missing out on customers due to funding?
Yes, there is. There's a couple of things. So in the short term, what we've done is we've recently signed a new 3-year agreement with Fairgo Finance, who were our funder under the old model. So that allows us to, one, if we need to, we can refer additional customers to them to manage our growth under the facility. It also allows us to manage, I guess, our risk in terms of where we have, I guess, concerns about customers, we can forward them to Fairgo Finance, who might take a more granular approach or might take a different risk profile on that. Both of those help us manage the $10 million facility, but we've also received a lot of encouragement, like even though we're only a month in, there's a clear path to us extending and growing that 10 million facility to 15 million, 20 million and beyond.
Fantastic, Jan. That does bring us to the end of our Q&A session. As always, if you do have any further questions, please feel free to email us at info@corporatestorytime.com. Jan, before we close today, do you have any final comments you'd like to share?
Not really, Nicola. I just would like to thank everybody who's attended the webinar. I really appreciate your support. And some great questions have been shot through, so thank you very much for that. And I just reiterate, if you've got any follow-up questions, please contact Corporate Storytime and we'll address that as soon as possible.
Thank you, Jan, for such a comprehensive update. This does conclude our webinar for today. A recording will be available and shared shortly through rent.com.au and Corporate Storytime social media channels. On behalf of Rent and Corporate Storytime, thank you all for joining us, and we look forward to welcoming you to our next investor briefing webinar. Enjoy the rest of your day, everyone. Thanks, Jan.
Thank you.